Imagine waking up one day to find the financial landscape as you know it has shifted dramatically. Yes, you heard right. In the ever-evolving world of finance, where stability is often taken for granted, your go-to retirement plans and investment strategies might be due for an unexpected twist. The ground beneath your feet could shift, leaving you on unfamiliar terrain. Welcome to Dividend and Conquer, your sanctuary for unraveling the mysteries of the stock market and turning the tides in your favor. Here, we're not just passive observers. We're active participants, charting a course through the stormy seas of market volatility and legislative changes. Let's get straight into a pressing issue that's been causing a stir among investors and policymakers alike: the potential upheaval in the realm of 401ks. Picture this: the backbone of American retirement plans facing unprecedented changes. The prospect isn't just alarming. It's a clarion call for a strategic reassessment of your financial future. What does this mean for you, the savvy investor looking to retire early on the sweet, sweet returns of dividends? It means the rules of the game may be changing, and with change comes opportunity. This moment, fraught with uncertainty, also holds the promise of reshaping our approach to saving, investing, and retiring. As we stand at the crossroads of potential policy shifts, it's crucial to not just react, but to anticipate and adapt. The landscape of retirement planning is transforming, and with the right guidance and insight, you can navigate this new terrain to secure not just a comfortable retirement, but a prosperous one. How prepared are you to pivot and conquer in this evolving financial landscape? As we navigate the choppy waters of the stock market, a question looms large. What if the golden era of dividends is threatened? Imagine relying on these payouts for your post-work paradise, only to find the well running dry. Fret not, for we have strategies up our sleeves to ensure your dividend dreams don't turn into nightmares. And speaking of nightmares, let's address the elephant in the room: the S&P 500's potential for a lost decade. Could we really see a repeat of a period where growth is as elusive as a mirage in the desert? We'll explore historical patterns and what they portend for your investment strategy. Let's tackle a conundrum that puzzles many: the intricacies of IRAs. With limits and loopholes aplenty, how can you maximize these vessels for your retirement riches? And in the realm of portfolio diversification, the allure of a three-fund strategy beckons. But how does one navigate this path wisely, ensuring a balance between growth, stability, and those coveted dividends? The allure of cutting-edge investments like AI and semiconductor ETFs. With giants like Nvidia dominating headlines, finding an entry point that doesn't break the bank is key. We'll dissect alternatives that offer exposure without the heart-stopping price tags. Imagine a world where financial security is not just a dream, but a reality for those who dare to navigate the maze of the market with wisdom and foresight. In the shadow of potential upheavals in retirement planning, particularly the rumored restructuring of 401ks, it's crucial to understand the gravity of the situation. The government's eye is turning towards these tax-advantaged plans as a source of revenue, a shift that could redefine the landscape of American retirement savings. But what if I told you that this isn't the end, but a new beginning? Let's explore how diversifying your portfolio can safeguard your future against such policy changes. Take, for example, Jane Doe, a fictional character who epitomizes the proactive investor. Jane diversifies her investments across ETFs, stocks, and bonds, ensuring that her retirement savings are not solely dependent on her 401k. She's a beacon of financial prudence in uncertain times, illustrating that when one door closes, another opens. But how do you achieve this level of diversification? Let's explore the world of ETFs, a haven for those seeking both stability and growth. ETFs, or exchange-traded funds, offer a basket of stocks or bonds, providing a balanced diet for your investment portfolio. By investing in ETFs, you're not putting all your eggs in one basket. Instead, you're spreading them across different baskets, each with its own potential for growth and resilience. And then there's the realm of dividends, the golden nuggets of investing. Dividends can be a steady stream of income, but they're not immune to the economic tides. Let's revisit our earlier mention of the dividend aristocrats, companies with a long history of paying and increasing their dividends. These companies are like the mighty oaks in the forest of the stock market, steadfast and reliable. Investing in these companies, or ETFs, that track dividend aristocrats can provide a buffer, against the volatility of the market. But let's not forget about the potential pitfalls. The specter of a lost decade looms large, threatening to stall the growth of the S&P 500. Here, historical insight becomes our guide. Consider the early 2000s, a time when the dot-com bubble burst, leading to a period of stagnation for many investors. However, those who continued to invest wisely, focusing on diversification and long-term growth, eventually saw their patience rewarded. It's a testament to the adage that time in the market beats timing the market. Let's also tackle the conundrum of retirement savings beyond 401ks. The IRA, with its contribution limits, might seem like a puzzle, but it's a puzzle worth solving. Whether you're contributing to a traditional or a Roth IRA, understanding the limits and strategies to maximize your contributions can significantly impact your retirement savings. Imagine splitting your contributions between a traditional IRA and a Roth IRA, balancing the immediate tax benefits with the future tax-free withdrawals, crafting a retirement savings strategy that's as dynamic as the market itself. Now, consider the allure of investing in sectors that promise explosive growth like AI and semiconductors. Rather than chasing the high-flying stocks with equally high price tags, savvy investors look to ETFs like SMH for a piece of the action. These ETFs provide exposure to a swath of companies leading the charge in innovation, without the risk of betting it all on one horse. It's a strategic move that mirrors the approach of legendary investors, spreading risk while capturing the upside. In closing, let's circle back to our starting point. The financial landscape is ever-changing, with challenges and opportunities intertwined. As we stand at the crossroads of potential shifts in retirement planning, market volatility, and investment strategies, the path forward is clear: education, diversification, and perseverance. Before we part ways, I pose one final question to you, our valued viewer. In light of today's discussion, what steps will you take to fortify your financial future? Share your plans, thoughts, and questions in the comments below. Thank you for joining me on this journey through the intricacies of investing and retirement planning. If you found value in our time together, show your support by liking this video and subscribing to Dividend and Conquer. Together, we're not just watching the market, we're mastering it. Until next time, keep conquering your financial goals, one dividend at a time. Remember, we are not financial advisors, and the content presented in this video is for informational and educational purposes only. Always consult with a licensed financial professional before making any investment decisions.